Okay, welcome back to the channel. Today I'm going to be breaking down this trade on GJ 17.5. So I took this, put the signal out as well. I have that pop up on screen right here. And I'm also going to break down a small mistake I made on this trade. Very, very simple fix. You guys can apply this pretty much instantly to avoid many losing trades. So that was just a simple one I made. And yeah, I'm going to be going through this trade. It was very nice, 17.5. The price action behind this, the reasons that I took it. It was interesting price action, but essentially everything lined up that we wanted to see in terms of overall trend and then the zone itself in terms of positioning. So this trade right here, 17.5, and it actually had a stop loss larger than max stop loss, which obviously means this was a very large move. Normally this would be a 1 to 10, somewhere around here, and the stop loss would probably be around this small. So it was a very large position in terms of stop loss and TP, but overall price action was very large at the time. So this is the first factor to this trade, is that this is how the markets are moving. Frequent swings, but a very large size. So when we're looking at the highs and lows, the high, the low, the high, the low, they're far away and it's major structure taking place. Even though within these moves, there's smaller lows, minor levels, etc. But they don't really matter because what's actually playing out here is overall trend. So it's always important to zoom out and look at if there's a bigger trend recently that's going on that's controlling the overarching price action. When I'm zooming in up close like this, there's smaller trend, there's smaller levels. These aren't that important when the markets are moving this type of way. So what's important to note is that this demand zone, at the time of the position, the most recent thing we had done, despite all this in the middle, not really that important, is come down to this level, pushed up, and taken out all these highs to the upside. So as soon as something like this happens, of course we're going to be looking bullish. This is the break of this level essentially, because this held a couple times. It didn't take out its own high here. And over here as well, if I zoom in on it, just about took out this high and immediately crashed to the downside. So not a confident price action of the markets going bullish. At this point, we'd retraced and we were looking for a potential bullish continuation, but this is not a clear take of the highs. This one was completely different. If we look at the price action here, we took out the highs to the left, had a retracement and still continued bullish. So I'll zoom in on that so it's a little bit clearer. Took out the highs here, retraced. This is a chance for the markets to crash straight back downwards. Exactly the same as they did over here after taking out highs. And then also when it came back up, we failed to take out highs and we did go bearish. At the time of that trade, we did have a potential demand zone. So when we see that type of price action playing out, it doesn't crash the downside, it's just slowly moving, standard market movement, and we had a potential demand here. Now this is the trade I made the mistake on. So very simple with this one. You can avoid so many losses by using this. Super easy factor, but over here, this is where the weekly candle opened. There was no weekly bottom wick at the time of this trade. When you have price action like this, moving to the downside, and there's no weekly bottom wick, and it's this close, you're always going to expect the markets to go and make one. If you go onto the weekly time frame, essentially almost every single weekly candle has a top and a bottom wick. So it's highly likely that the markets are going to make one. Now, it depends on the day of the week, right? If you're on a Thursday or Friday, it's probably not going to be as important. So this one over here was on a Tuesday. Now, of course, if it's Thursday, Friday, there's a chance it's just not going to make one. It does happen rarely, but if you're not moving towards making one as well, then there's a chance it just doesn't make one. But if we're early in the week on a Tuesday, moving downwards like this, super high chance, no weekly bottom wick, just simply avoid demands. Very easy factor. Now, I still could have considered this, but I actually took an aggressive entry as well. So that was where the mistake came from. If I was aware of the fact, which I was earlier in the week, but I ended up forgetting about it, that there was no weekly bottom wick here, then I would not have been looking for any aggressive entries. So easy thing right there, you can avoid many losses by looking for a weekly top wick or bottom wick, especially if it's Monday to Wednesday and you're moving towards making one at the time you'll trade, a very high chance it goes to make one. So you can use that and just avoid many losses very easily. Now, for the trade I said, so like we saw over here, we had that price action taking out overall highs, so we're going to be looking bullish based off past price action. We had very nice key levels up here to reach, and so everything lined up essentially. This zone itself is the best zone we can trade off because it's the bottom zone in structure. All these zones over here, this one, none of these are as good as the bottom zone. This is the best price to get in at, so it's going to have a large retracement, which we've been seeing, large structure playing out. There's no zones underneath this. This is the zone that caused this whole move to the upside. So when price comes back down to this one, it's always going to be the best quality zone we can take. Now, the second thing about this was liquidity was very close. We had liquidity right in front of the zone, which is always good because liquidity is being wiped at this zone at the same time as it's tapping into our trade. So it actually affects the zone a lot, and that's also very powerful. So we had everything line up, a large retracement. At the zone, we saw a lot of volume, so that was also a good sign. It was very early in Asia session, this one. Of course, anytime you can trade, it doesn't make a difference on the 30-minute time frame. Just whenever a good zone shows up, then we'll take it. But this one especially, there was very good volume around a time where sometimes there's not much volume, so also a very clear sign to take this one. Now, in terms of TPs, everything here essentially lined up. Recently, I've been having a lot of unscheduled news to do with Trump situation, the Middle East situation, whatever it may be, come out. And so I was a little bit more conservative. TP1 was at the highs here, just for a 1 to 3. It would normally be at these highs because these are the only highs before we just have straight price action up to the overall highs. But because it was 1 to 3, there's a lot of the time I'll extend it, and potential 1 to 4 is what I was aiming for initially. But we actually had news coming out just around here, I believe. So around an hour or so after we hit this 1 to 3, and so I was okay with just closing for the 1 to 3 an hour before the news. Now, it actually would have ended up hitting a 1 to 4 before the news anyways for TP1, and I always close 50% at TP1 anyways, so it doesn't make too much of a difference. But yeah, essentially, TP1 the first highs, you always just want to lock some profit in, especially when you're going for very large risk reward trades like this, because otherwise, there's a chance you're up here 6%, whatever, floating, and the trade just reverses, and you don't really know when to get out or when to close half. And so TP1 just make it very easy to know exactly what you're doing, lock in some profits, and then be comfortable with holding the rest of the position, knowing you've already made money. So that's the simple reason behind it. And of course, targets with that overall structure, all we're expecting next after we've taken out the overall highs, we've had the larger retracement, is that move back to the upside. And that's exactly what we saw play out. So very nice price action on this one. Everything we were looking for essentially, and even the TP itself went straight there in about 1 day. It was on Monday market open that this ended up hitting. So yeah, very nice vision. Everything lined up. It was always going to be a trade we take. GJ bottom zone. It's just a classic GJ trade, to be honest. We always see this type of price action on the pair playing out. And so yeah, that was a nice position. Apart from that, there was another potential winning trade I had in the week. This was on the Monday, and it was GC supply for a 1 to 5. This one, unfortunately, unscheduled news did actually mess up. So right here, there was unscheduled Trump news. We were playing out nicely, and it brought it back just to retest the zone and stop us out by spreads, and essentially went straight to TP right after that. So this would have just been a standard win if that didn't happen. So unfortunately, I ended up getting stopped out by spreads here. A lot of people managed to stay in this, and so they did actually take the 1 to 5. The price action on this as well was also very clear price action. In terms of trend, we were in a downtrend. We had this strong move to the downside, instantly corrected, but still respected the highs, and dropped down and immediately started taking out lows again. So whenever we see something like this, we're looking at key levels. Here there was a fairly strong key level with multiple reactions, and so that was for the most part always going to be the target on this position. There was potential extensions down here if you did end up staying in the trade, but overall 1 to 5, when you have this type of unscheduled news that could come out any moment, is a very nice place to take profit. So again, with this one, liquidity in front of the zone, 2 candles, that's all you need for valid liquidity, and it was at a good distance. So very nice in this one too. In terms of the trade itself, some people were not looking to take it and they were looking for this top zone. Now, that's not something you want to wait for when you already have a good zone with liquidity and the trend is good. This zone in and of itself isn't really much difference to this one. In terms of retracement, it's a little bit further away, but there's also zones above this. There's another supply zone here. There's potential as well up here at the top. So you have all these zones. The first one you're always going to be looking to take. The middle one is normally the one you would avoid, just because if these ones are losing, then you either look for the first one or the top one. You can still take both of these. Don't get me wrong, there's still zones you could take. This one doesn't look that great, there's no real liquidity. But these two you can still take. However, the first zone, when trend is clear, is always going to be considered, and if it gives a valid entry, we simply take it. So everything lined up, had liquidity, was taking out lows, had a decent retracement back to the zone in terms of direction, good volume in the candle beforehand, which is always nice to see. And essentially, yeah, played out straight away for a 1 to 5 at these levels. So things are looking good still. Nice to have a winning trade again on the 30-minute time frame with GJ right here. high risk to reward as well. And it could have ran for 1 to 10. Obviously, 1 to 10 is our max risk to reward up here. Definitely could have held for 1 to 10 as well. But like I said, 17.5, already more than enough. This was a 250 pip TP, I think, that we hit in about 2 days, which is very quick for that distance. So no need for me to take extra in that situation. It's already more than enough. Across the markets, we see nice trades playing out. I mean, in terms of other pairs, UJ had a 1 to 10 right here. This one was just a little bit early for me to take, even though it was actually still around entry afterwards, but I didn't want to take a re-entry. So it didn't take off initially, and yeah, I didn't take it when I was at the markets around this time, even though it was around entry anyways, but it just ended up taking off. If we did take out its own high, I probably would have still taken it, but the structure is not great, even though this doesn't make the trade invalid. Just forming a small double top, it's a slight factor you can consider. Overall though, overall trend is always the most important factor. If you're looking at the markets, you want to grade things in terms of how much you give each factor weight. Overall trend is always going to be the most important. If overall trend is clear, anything else can be B tier or in the middle, you're still going to take it. Overall trend is what makes the trades the best quality they can be. There's also a position down here. Now, this zone is in purple. It means I didn't take it, and usually there was something different about the trade, but this one I just have on the chart because I was going to do a breakdown. Essentially, I would have taken this if there was any liquidity. I'd always look for a trade like this because of certain factors. The main one being the move to the zone. If we look at this move to the zone, it's essentially just a straight line. There's no retracement. And so you're always going to expect a retracement after this happens. Whether there's a zone or not, whether the trend continues or not, you're always going to expect a retracement. And so in this retracement, if there's a good zone with a good entry, you can actually hit TPs within that move. So when you see straight line movement like this, you can always take advantage of it. When the markets are overall not the clearest, all the movement beforehand was bullish, and we've only had essentially one followed by a short retracement and then 2 straight line pushes. Whenever you see straight line moves in the market, 1, 2, 2 is normally always the max it gives. You never really see 3 straight line moves unless there's something extreme going on. Here, there wasn't really anything extreme going on, so it was unnatural price action. However, we reached the zone. It's the second push of a straight line, and so you're going to expect a retracement. That's exactly what we saw. Now, the zone itself didn't have liquidity, so not really in the strategy at all, but I just had it there because I was going to essentially explain that concept, because you can definitely utilize that as well when you're taking positions, and it's just something to note in the markets that can definitely help your edge. So that was that one right there, and it had potential for a 1 to 4.5. Whenever you're taking a trade like this, you're going to be conservative on the TP, not aim for highs, not aim for large risk reward, and just take it at the first target. First target on this retracement is simply retracing through the clear space where there's no price action to hold it back, and stopping at the first place there is, which is this supply zone. That's the most conservative TP you can take, regardless of what the risk reward is. That's what price action is telling you. So even if somehow there was an insane entry and this was like a 1 to 6, you would still look to take it out on 6. However, you could lock in something a bit sooner just because you now have the chance for higher risk reward. So that was that. And overall, I believe that was mostly everything across the markets. There was a couple other trades that week, but those are the most important ones really to break down. So yeah, things are looking great in terms of price action. Couple unscheduled losers still coming out, unfortunately. But apart from that, the markets are looking amazing. GJ coming back with classic positions. That's everything I want to see. The last month or so has been very, very good in terms of price action, trade opportunities. So we've just seen a complete reversal of slow markets and not really trade showing up to loads of winning trades happening at once. This is why it's important to always be switched on. Don't let losing conditions or slow market conditions throw you off the game or make you stop caring about your habits, because 3 months of winning conditions can come and go quicker than ever imagined. People who are focused, scale up, get payouts, perform well. And if you weren't switched on in losing conditions and you can't turn it on quick enough in winning conditions, which you probably can't because it's difficult to just instantly turn something on, you have to be in a good state of mind the whole time. You always have to be in that high frequency, ready to capitalize on the markets. So if you're not doing that, even when there's not really potential for good results, which there always is because it can happen at any time, you're not going to be able to take advantage of when winning conditions come around. So just a quick lesson there to make sure you're always switched on, always being focused, because things like this can just happen out of nowhere 30% in a week, things like that. And you want to capitalize on that as a trader. Okay, so that is everything for this video. Very nice trade on GJ for a 17.5. Now, I have actually opened a free Discord group, so if you guys are interested in joining that, you can join up right here. Of course, the full Discord still always be open, and yeah, essentially we've got everything in here. This is that GJ trade that I was talking about, and that's everything. So if you're interested in joining those, links will be in the description, and yeah, that's everything for today's video.